Well, good afternoon, everybody. Welcome back to another episode of the Industrial Real Estate Show. I am very pleased to be talking about a market that a lot of people might not know a whole lot about, and that is Costa Rica. And to fill in some gaps and provide some more information, I'm pleased to be joined by my friend Alvaro Cortes. Alvaro, I said your name wrong, I'm sure. How do you actually pronounce it?
So you're actually spot on. It's Alvaro Cortes, so it has a little ring to it in Spanish, but the way you said it is perfect, man.
The way you say it sounds very cool, though. I wish I could I could roll it like that. That is very cool. Well, thanks so much for joining me. So we've been connected on through SIOR for a number of years, and have got to hang out in the last SIOR conference as well. So it's just a natural to dive in to some Costa Rica, because a lot of people probably don't know much about it. Sandwiched between Nicaragua and Panama. I've been to Costa Rica, and one day actually we had the pleasure of, we flew into San Jose, and then we drove to the Pacific coast, and then drove all the way to the Caribbean coast in one day. So that was the highlight of getting to stick my feet into two different major bodies of water in one day. Beautiful country. How would, before we dive into the commercial and industrial market, how do you just describe Costa Rica as a resident there?
Oh my God. Well, Costa Rica, the best way that I have to describe it is, and usually this happens when I'm talking to someone, let's say from Canada or the US, I'll be like, I live where you vacation, guys. So it's like this absolutely amazing place. But I mean, our people, I would say it's the number one best, like our Pura Vida lifestyle. People are just so chill and nice. Everyone is just, I don't know how to put it, like vibing together, if that makes sense. But it's a beautiful place to be here. It's not the cheapest place to live, but within the vast order of things, we have great nature, a relatively small people with a relatively small, let's say, distribution of land. So as you said, everything is close by. You can go in the Pacific Ocean in the morning and then go into the Atlantic Ocean at the afternoon, see a sunset in one side, see the sunrise in the other one. So it's a beautiful place to be. And I've been living here all my life, so I can't complain. It's a beautiful, beautiful place.
You speak English fluently. I'm guessing Spanish is your first language?
That's my first language, yeah. It's my first language.
I remember when I was in Costa Rica, there's a lot of people that still spoke English, but Spanish was more prevalent. Do you find that there is a fair amount of people that can speak both, or is Spanish still just the main one?
Oh no, vast majority of people are bilingual here. Like English is our second language here, to put it somehow, but definitely Spanish is number one. Yeah. In my case particularly is because, and I have to give all the kudos to my mom particularly. She is or was an English teacher, and my sister, my brother, and I, everything that we did at home was everything was in English, like Sesame Street and music and books and stuff. So English was just part of our lives from day one. But Spanish, eso es lo primero. Like that is our number one language here and in general.
Oh, very cool. So Costa Rica is about 5 million people. Is that right?
Yeah, a little bit over 5 million. Yeah.
And from what I remember, most of it's clustered in San Jose. Is there other bigger cities, or is San Jose the dominant one?
No, San Jose is the dominant one, but what's interesting is the perception of what San Jose actually means. Because, and this is fun, like you would fly into San Jose, but you're technically in an area called Alajuela. And that technically is another province, and it is another city. But it's perceived as what we would call the main city, or what we call the greater metropolitan area, which is actually it's all of San Jose and then a small portion of other provinces like Cartago, Heredia, Alajuela. And that's what we call, let's say, the city. That's where the vast majority of activity is happening, both from a business and just people living here. And then we have a couple of clusters that are mainly driven by tourism in different coasts, like in Guanacaste, Central Pacific, and the Caribbean, which are hubs, as I said, mainly for hospitality and tourism. But all the action, vast majority of action is, let's say, within those what we call the greater metropolitan area. What everyone else calls just San Jose, that's where everything happens.
Yeah, that makes sense. Are there any major ports in Costa Rica?
Oh yeah, we have two main ports. We have the port of Moine, let's say that's more on the Caribbean side, and then we have as well Caldera. I would say that's the only main port, Pacific side as well.
So how, because you probably produce a lot and you probably export and you import. Is a lot of it going through the main ports, or are you sending it by truck or rail to Nicaragua or down south to Panama? How does the infrastructure tend to work for imports and exports?
So it's a little bit varied, but let's say if we were to go to specific sectors, and I'll talk about the one that I know a little bit more of, which is the life sciences sector. About 48% of that is through ports and let's say sea activity. Then we have land, what you just described, either to Panama or Nicaragua, all the way up to Mexico, which is around 20%. And the remainder of that is airways. And again, in that specific sector, it has a large percentage because they are highly valuable items that are just going to the rest of the world and specifically to the US. So it's a big, let's say, logistics hub in that sense from the airway perspective.
I was just looking into Costa Rica a little bit before we jumped into the call, and one thing that I found interesting was that in 1948, Costa Rica abolished the military and reallocated the money that would have been spent on military into healthcare and what was the other one? Healthcare, education.
Education, yeah.
So are those two, that was nearly 100 years ago now, are those industries thriving as a result of that reallocation of funds?
I would say yes. Thriving is a strong word, right? But what I think it's powerful about that, Chad, is what we're not doing and what we're doing instead. So when all of that money is funneled into education, you get pretty good like public education. So literacy rates are super high here, bilingualism, and the amount of people that maintain themselves, let's say in the formal education system, is also off the charts. And it's, I would say, part of the secret sauce of why Costa Rica is an interesting place to be, or as we say, a player that punches above its weight, because all of that money is being driven into that. So I'll give you an example, like college education here is very low cost. We have Universidad de Costa Rica, which is the UCR, one of the most renowned universities in the whole region in Central America. And the cost of doing that, let's say like per semester for a normal non-scholarship student's going to be less than $600, something like that. And then you can get actually a scholarship for it and do great with grades. And there are people who pay as little as zero on very good formal education. And those are some of those examples. Same with the high school and middle school systems, which is like anything, nothing's perfect. There's lots of opportunities for improvement, but within the perspective of the broad range, let's say when we compare it to the region or other parts of the world, I think we're doing pretty well. And healthcare, we do have a public healthcare system that a good friend of our family, it's almost an uncle of mine, but we have no blood in common. We're just carried for each other a lot. He says that the part of the peace of our country and part of, let's say, the stability is that healthcare system, is people who wouldn't normally have access to great healthcare. In Costa Rica, they do. And in my case particularly, like I've seen that in my life, like back in 2008, which is a weird way to say it, right? Like 2008, like 2008, 2007, actually, I was in a pretty bad, car wreck, and it sent me to the hospital for over a month, and It was all public healthcare. No, I mean, I don't want to make the podcast about this. That's like for another thing, but it was a tough experience. 3 of my friends lost their life that day.
Sorry to hear that.
Yeah, I appreciate that. It's a long time ago, but it still hits hard. But my point, going back to healthcare, so we don't do it about that other thing. I mean, they saved my life. Like I went into the public healthcare system and they literally saved my life.
Yeah, and you hear stories about people that have accidents of all varying levels of intensity, ranging from something like a a small injury all the way up to something devastating like that. And you hear about people that don't have public health, and it can be very devastating for their lives financially. So yeah, having that public health care is certainly big. What are some of the other industries in Costa Rica? I know like there's tons of rainforest, there's tons of volcanoes. Like you said, you've got most of the population focused around San Jose, the greater area. What are some of the major industries in Costa Rica?
Oh, well, there's tons of things going on here. I mean, we're great in agriculture we were founded, right? Like coffee, bananas, pineapple, all the agriculture part is a big part of our economy. Definitely the service sector, tourism is huge, right? Definitely real estate is actually an interesting industry here, precisely because it takes to all of the other sectors, service sector, life sciences, logistics, industrial, office, so on and so forth. So it is a interesting percentage of that. But I'll ask the question back to you in an interesting way, because you've been reading about it. We've been talking about it before. And I always love to make this question. If you had to guess, and if you already have the answer, then we don't make the question. But if you had to guess based on your perception of Costa Rica, what would you think is our number one export product?
Well, just because I actually have a friend who's starting a coffee company in Costa Rica, I would say coffee.
That's really cool. Coffee?
Yeah.
Okay, so if this was 1981, you'd probably be right.
So interestingly enough, 44 years off.
just a tad off. Our number one export product is actually medical devices right now. So Costa Rica exports $8.7 billion worth of medical devices to the rest of the world, and primarily to the US and North America. And that is the number one export product, let's say in volume, right? If we go into the units, probably it's going to be more on the agricultural side, but it doesn't bring as much value to the economy as that. And that's a product. The other one that it's even larger, and it goes a little bit under the radar because it's tough to measure it. You don't have like an actual product. Say, I have one product of this in my hands. Now I have 8.7 billion worth of those, is the service sector. So service sector has a very similar, let's say, behavior since early 90s here, when our economy shifted from low value manufacturing into services, and the knowledge economy, that's early 90s. And let's say end of 2024, more than $16 billion were exported from the knowledge sector. And those are all these North American mainly based companies that are exporting via BPOs, knowledge processing, outsourcing, even R&D. Like we have now, let's say that segue between life sciences, manufacturing, and service sector. R&D is also now being made in Costa Rica for several, let's say like Fortune 100 companies, and everything in between. Contact centers, shared service centers, centers of excellence, all of that. That's a huge motor for us. Like, there's a joke internally, like with everyone in Costa Rica, that you had not had a job unless you've worked for an American company in a free trade zone. Like that is your rite of passage. Like I worked for several of those back in the day. I've worked for Amazon in their contact center back in the day, for Sykes, which was is a Tampa-based company. Those were the rite of passages. Like if you ask anyone in Costa Rica, statistically, you got 10 of them in a room, at least 2 or 3 of them will be working for something like that.
Oh, fascinating. So what's the labor force like now? Has it gone, you mentioned it's gone from that low labor manufacturing side to now being more knowledge workers on the service side. Is that what it is primarily? Would you say that it's moved away from that manufacturing base to now more high tech, knowledge skilled, or is there still a lot of manufacturing there?
Oh, there's a ton of manufacturing, but when I mean is the more lower grade in value. For example, I'll use the same medical device sector. Like we started with disposables, and as we were growing, then it became about diagnostic equipment and therapeutic devices and that kind of thing. Like there's a fun story about it and how it adds up. But back in the day, and this is again early 90s, Hanes Brands had a huge operation here. And a lot of the population where they were, they knew like the exact knitting techniques and how the machines worked. Then we became too expensive for that. And that's a little bit more in what's being driven into education and all of that. It just sets the bar a little bit higher. So all these companies, Hanes included, said Costa Rica doesn't work, and they went to Nicaragua and El Salvador and other parts of Central America. And what's interesting is now that same people, 20 years later, are the ones needing hard valves for Edwards Life Sciences and those types of companies, which is a process that has not been automated yet because they need the manual labor to actually knit in the way the stent needs to be done. So it's sort of an evolution. It's sort of a switch that's been evolving into that. Same with the service sector. We started out with very transactional contact centers. And as we grew as a country and our, let's say, education level keep raising the bar for everyone, companies started seeing like, I could probably get different processes into Costa Rica and actually add value from there. So when we started out with very simple contact centers, and we still have some of those. They're very active. It's part of an economy, same as disposables in manufacturing, but it's kept on growing. So that's where the center of excellence come in, R&D, design. Like I'll give another interesting example that touches both those industries. Align Technologies has a huge operation here, huge. They have about, let me make this math in my head really quickly. They have 3 buildings here, and they add to about 300,000 square feet in total office space. And they use it a lot, like it's occupied. And a lot of the design process for the Invisalign is processed here in Costa Rica with digital manufacturing. So it's office space, it's corporate services, an export of a service, but it's in that industry, and we're touching design and manufacturing and people calling dentists back and forth, and sort of that process, if that makes sense. So it's been evolving. It's been evolving.
That's very cool to hear. Yeah, it's like just hearing you speak about it just opens my mind to how many different industries and just how, even I've been to Costa Rica, I didn't fully appreciate just the depth of the industry and how much it adds, not just to your economy, but to the global economy. That's fascinating. Oh, yeah. What can you speak to just some specifics on the market? Like if you could speak to how big the industrial market is or the size of the office market. Those would be some really interesting stats if you happen to have any top of mind.
Yeah, I do.
Perfect.
It's what we do all day, thankfully. No, just kidding. But yeah, for sure. So let's start with the office market. So the office market is currently almost 23 million square feet from a total inventory perspective. And as it is no surprise to anyone, after the pandemic with a global disruption on office space, remote work, hybrid work, our vacancy levels, which were very much stabilized between 8 and 10%, then spiked all the way to 20-something%. And back in 2020, 2021, and right now it's been slowly stabilizing, and we're currently at an 18.7%. Now, what's interesting about that is that when we see it, that is someone who just put all the numbers in an Excel file and said, add it up, and against inventory, that's the total actual space that's vacant. But that doesn't necessarily reflect the reality of the details and what's happening in the market. Because when you zoom in into that Excel and to actually put buildings and streets and neighborhoods and dynamics into it, we start seeing clusters. And that has been super interesting in the past 2 years, where we see a very specific cluster in the city that gathers very specific, let's say, characteristics from an urban development perspective, or the quality of the product, or just how well connected it is, right? Location, location, location. And we zoom in into that, like places like Heredia, Ulloa Heredia specifically, which is a submarket north of San Jose, 5-6% vacancy rate. Then you go into San Jose, middle of the city, CBD, a market that's actually technically and ironically an emerging market, because back in the 70s, somebody had the great idea of separating uses in Costa Rica, and they basically destroyed the fabric of the center and created an urban sprawl phenomenon. So now we're dealing with that, but now it's coming back with better regulation, incentives for development, densification. So the very center, which is currently a emerging market, vacancy rates less than 3% in Class A trophy assets. But if you go in the same neighborhood a couple of blocks away for Class B, Class C options, 50% vacant. And it's almost the exact same location, but it feels so different. And then again, I'm not saying anything new. I'm not discovering lukewarm water or anything like that, but that's happening in a lot of US cities. Where I don't see that happening is in city centers, for example, in Europe, where densification is it's conceptualized different as major US cities, or in our case, as in Costa Rica. So that's a little bit of the dynamics happening in office space. Industrial, very interesting. Like industrial right now, it's this hot asset type. It's just amazing, the amount of demand and the amount of things moving along. The total market size is more than 72 million square feet. So for a 52,000 square kilometer place that is famous for beaches and volcanoes and coffee, we have way too much industrial space, and it's less than 3% vacant overall. And this is without clustering. Like, this is the Excel file, like what's not happening, what I explained in office space. And when you go deep into the clusters, it's less than 1%. So we're seeing a market that's, and very, very honestly, it's being driven by medtech, life sciences, advanced manufacturing. And depending how tariffs go, and if we are going to keep the Science and Chips Act going or not with the US, semiconductors as well, which is not necessarily new for Costa Rica, but there's been talks, and there's been the different industries alongside with the US, which is a great commercial partner for us, to actually incentivize the processes for semiconductors that make sense, to nearshore them and take them out, let's say, from Asia, specifically for the US market. And like, Intel has been here since early 90s as well. There's actually, if you look this up, like if you go to Placer AI or Google, what's the Intel effect in Costa Rica? You're going to find something very interesting, because it was such a catalyst moment that it kind of helped us shift the economy where we have it now, from both the manufacturing and the corporate services sector. But yeah, industrial, crazy. Like, deals are happening. Companies are expanding into Costa Rica with crazy deals. I think I talked to you about this when we were in SIR. So stop me if I'm repeating myself. But for the sake of those who are not you listening to this, about 12 weeks ago, we closed a 350,000 square feet built-to-suit purchase from a company that was its first expansion outside of the US. Large OEM, California-based company, looking to expand their capabilities. But what was really interesting about that process was that when they reached out to us, what they told us was like, hey, we just need some very basic information. Nothing's going to happen. Like, the board is set that they're either going to go to another market in the US, was either Phoenix or San Diego in their case, or Mexico. Couple of cities in Mexico. But the CEO needs this just comparison because he's friends with someone else in Costa Rica who has an operation, but there's no deal. So, as you know this, as being a good broker means disregarding 100% of that sentiment, we just went all in and say, well, this is what is valuable. And we share the white papers that we did, and we got meetings with them, with the government, and liaison with companies here, and met with them and say, hey, can you share the story of how you've evolved here, how you've been successful, and why this might matter to them? By the end of all of that process, they were like, hold on a second, there's actually pencils on paper. And that meant basically a whole board of a publicly traded company saying, let's switch and let's go to this place. This makes way more sense. And we closed that deal, I don't know, 12, 13 weeks ago, something like that. And that is the bread and butter of what's happening here in the life sciences sector for industrial.
Well, congrats on that deal. First of all, that is a monster of a deal. So congrats on that.
We're very fortunate.
What does the land situation look like there? Because and this is maybe just my bias or limited knowledge on Costa Rica. But if I were to look at a market like Dallas or Phoenix, where they added so like millions and millions of square feet, and they can continue to do so because there's essentially developable land in every single direction. In my mind, I would look at Costa Rica as being really dense with rainforests and protected lands and environmental concerns. Is there ability for a developer? Let's say someone wanted to come in and say, I want to develop 160 acres into an industrial park. Is that feasible? Or does that mean a sacrifice of having to clear rainforest?
No, it isn't. At least we're not there yet. Thankfully, there is enough land to be developed in order to do that. Because we have several that's another like staple of Costa Rica, like sustainability, right? Like 98% of our electrical grid is renewable, and we have this rainforest conservation, everything that you just said, right? So, but we're still an emergent, let's say, undeveloped country. So there's still room for that growth. But what's interesting as well is that it's very sectorized, like the clusters. Like you would go into an area, and I'll put an example. Right now, there's a huge incentive, and I'll get into what the incentives are in a few moments, into a area of the city called Grecia. Grecia is usually, let's say, in the outskirts of the city, north of Alajuela. And because of some of the local incentives from a tax perspective and the talent that already lives there, they're developing that right now. So they're doing a couple of pretty large projects. One is called Evolution Free Zone. And it's just massive. Like Johnson & Johnson just, not just, but closed there, a huge operation that the other day I was there and I saw it, and it's just so huge as I can't believe this is an actual OEM, because it looks like an Amazon fulfillment center. Like that is the size of it. And that is like 20% of the developable area that they have, and developers keep on going. But still, we're still a relatively small market, right? So there are 3 to 4 main players that control the vast majority of that product. And it's vetted by the companies, by the country, and obviously sort of that culture and sustainability. So if it makes sense, we are very careful on how it's done. And if someone just goes like, hey, I'm going to tear down a rainforest because it's cheaper here, nobody is going to like go with that idea. But if you go into the areas of the city that are planned for that, actually makes sense, or where you have an industrial use, and we're very big on mitigation plans. So you'll go to any of these industrial parks and you'll see how they handle rainwater, and where you source energy, and how do they clean, and how do they handle waste and all of that. And it is world class. Like it is amazing, but it's because it's very much embedded, not only in what companies need, but in our culture, what we think it's the sustainable way of growing. So I'm not sure if I answered your question, but long story short, there is room, but there's a way to do it according to the best sustainability practices.
Has the government done any studies to determine how much land is available in terms of years? Like, because I know that there's markets with, like Vancouver in Canada is a good example. They've done studies that have said we only have this many years left of supply before we run out of land. Has Costa Rica done anything similar to that, to say we will run up against development constraints at some point in the future?
That is a great question. And the honest answer is, I don't know, because it hasn't been like a supper, like we're reaching that portion from a developing perspective. I haven't seen it, but I'll find out and I'll let you know if it exists or not, because I'm not sure. My feeling is that if it is, it's not a big deal right now, because if not, I'll assure you we would have that study like front and center in our office if there's any like restrictions in that sense. Now, what's interesting that it's more our concern is what is the amount of developing that the absorption that our market has can actually sustain for it to make sense from a business perspective. Yep. And where is the talent coming from, and how much of it we are re-inputting into the market year over year to actually sustain that whatever we're building for those industries actually have the talent to supply. That is where the conversation is more, where the attention is. And that's where the efforts are going into creating better STEM programs and creating public and private alliances, both with companies and the government and the educational institutions, to move that forward. That I would say, if you ask anyone in Costa Rica, that's more top of mind than not having enough land to actually make real estate for that, if that makes sense.
Oh yeah, it does. It makes perfect sense. It's just the opportunist in me, I guess, looks at it and says, maybe that's 20 years out or maybe that's 30 years out, but it will happen because you only have so much land. Whereas markets like Dallas and Phoenix that I mentioned, they can conceivably grow in every direction for decades with no impediments, where you will run out of land at some point of developable land. It's just how far down the road is. And any of those markets that have major land constraints, they typically see massive escalations in prices as the land just becomes more scarce. So yeah, that'd just be something that me as an investor would look at and say, maybe you get in now where that's not even a top of mind concern, but it will become a concern. As long as Costa Rica continues to grow, there'll be more demand for infrastructure and industrial real estate and all of that. So yeah, if you do happen to come across anything, I'd be curious to know on it.
For sure.
Would love to dive into some of the more specific numbers on it and just talk prices. On the sale price, as an example, what do you see for industrial? What do you see as like a good sale price for? And I know that this is a tough question to answer because it ranges so much depending on the cluster and the location and the size. But do you have a range on what things go for? And do you go on the metric system? Is it per square meter, or do you use per square feet too?
No, we use metric system. I'm just used to hopping one from the other because, as I said, like 90% of our customers are US based companies. So we are hopping back and forth square feet to square meter. So we have that like pretty handy, but we are metric system. We are square meters per month. That's how we charge rent, and the same for sale prices. It's price per square meter, right? Although real estate, even though we have our own currency, the Costa Rican colon, real estate is 99% made in US dollars as the main currency. So the good thing is that you already made the disclaimer, so I don't have to do it again. Yes, it's tough. We have clusters. Logistics is different than manufacturing. But then again, based on what's driving us, which let's say I'm going to focus solely on MedTech, life sciences, advanced manufacturing, class A. I would say that the range that we're seeing for manufacturing sites for these type of industries, anywhere between $1,100 per square meter, all the way up to, for the more sophisticated ones with a little bit of a higher grade and specification, to maybe $1,400 per square meter. That is the range where the zones of possible agreement are for closing. Now, what's driving that, it's interesting, and I actually answered that question in the panel in SIR for industrial. I'm not sure if you participated in that, but it was a very interesting panel because they were asking, instead of doing a lesson or a class, someone making a presentation, the moderator just was like, hey, there's 150 experts here. I'm just going to ask questions, and if you think you know something interesting, let us know. And I thought, oh, this is pretty cool. And then he made a question like, because industrial, I know that has been tough, specifically for the US with tariffs and the logistics things happening right now. And everything felt like it was, this is not great news. Some of them actually said, this is the revenge of office brokers because of how bad they had it in the last year. This is now our turn. But all of that segue in context was to explain this. He said, is anyone's market seeing prices increase instead of concessions and other things? And I raised my hand and we're like, well, lucky you. Tell us why. And there are two main reasons for that. So that range of let's say $1,100 to $1,400 for, let's say, build to suit manufacturing operations. One thing is that we don't produce the actual material. So we import the vast majority of them. So that impact that we're seeing price increase, but the demand is so steady and the demand is like right there that it doesn't really matter, because that's not what's moving the needle from an occupier perspective. It's not if it's $1 more or less. It's how does this operation here gonna save me in my cost from a business perspective and increase my output from a business perspective. So I think we're lucky in that sense that we are seeing prices being pushed up, and very much driven by these specifications. And that's where it gets interesting. Like, you need to get the right TPO. And I'm going to quote you on your industrialize book, by the way, on the right TPO roofing. And you need to get the vapor barriers done. Like, all of that is a thing here. Like, if you don't have an advisor and you're a company coming in and you don't quote the vapor barriers, those are just so expensive change orders happening to a lot of people who are just flying solo and saying, oh, this is probably the same as doing a manufacturing site in the US. Yes and no. You have to tropicalize it. And no pun intended when we're in the tropical set, but you need to bring it down to local experience. And that sometimes means where you put your docks, how you put them. Are you going to have your trucks going this way or that way? What type of clean room are you using? Hey, Costa Rica is super humid. How are you protecting your clean rooms from humidity? So no, there's a couple of things that are different, and those details are the ones driving price. And this is only core and shell, right? On top of that, then you get your TIs, and those are just all over the place. It's so specific to the operations of what they're doing that the range in there is a little bit broader. I wouldn't be able to respond to it specific because it's so driven by each company's requirement. Oh, I think I lost your audio. I think you're on mute.
Oh, sorry, I must have bumped that. Yeah, same thing in my market. It's very difficult to quote TI because it does range so much. And even something as simple as the quality of the office space. Some tenant might want to have the Cadillac version of their office, and someone might be satisfied with a very simple build out. Right. And that can be the difference between double the cost just by the quality of office build out, let alone whether they want cranes or whether they want makeup air or sprinkler systems. Like it's so difficult to actually judge.
I'll put it this way. There's a client of ours who made stacked clean rooms because it was more efficient that way on how they handled their product. But when you're doing a clean room on top of another clean room, there's a lot of logistics into that, and sort of the guts of the building just drives your price crazy up. And nobody sees it. Like, oh, this is amazing. Why did it cost 3 times the cost of the other one? And then justifying that from a business perspective, not from a real estate perspective. That's where, for life sciences, that's where it gets like really interesting.
Yeah, no, good point on that. What do lease rates look like? Again, quoting, you do per square meter per month, whereas most people in the US would be per square foot per annum. So I'll have to put some calculations in here to show it after you give us the numbers. But in square meters per month, what are average lease rates?
So same disclaimer. If we're talking about that same industry and asset type class A, we're seeing rents anywhere from $8.5 to $9.5 per square meter per month. Logistics, it's a little bit different, obviously, because cost of land is different. And the cost of actually building is not the same doing the full infrastructure with the clean rooms and what you need for that than a logistics hub that, let's say, it's not that it's better or worse. It's just that the specifications are different. And we're seeing probably anywhere between 7 to 8 in logistics sectors, also depending on where you are in the city. But those are two broad ranges that I would say apply to the vast majority of the market.
Yeah, that makes sense. What does the ownership look like? Is it a lot of local investors? Do the companies own? And speaking specifically for industrial, is it local ownership? Do the companies own it? Is it foreign ownership, institutional? What's the breakdown of ownership in Costa Rica?
That is a great question because you just opened Pandora's box here, and we have it a little bit all over the place. So in order to answer that question, I just need to make a segue on something that why is it this way? And one of the main reasons that companies come here, Chad, is because we have what we call the free trade zone regime, which I hate the word regime. The free trade zone tax incentive program would be more appropriate, which provides great benefits, like up to 0% duties for companies if you invest in our country and export from here. And that creates some rules for not only for the companies, but for the developers and the owners. So all of that rules, what we're seeing is that the vast majority are owner-led, and they need to control the vast majority of the project because they need to maintain it not only from a commercial perspective, but in compliance with the free trade zone regulation. And that means how do you audit, how the park is designed, and what are the exits and entries. And then you get a lot of auditing requirements from our local government, which is called Procome. And the vast majority of demand is coming and using that tax incentive program, the free trade zone. So we need that real estate be aligned with that incentive. So the vast majority is developer landlord owned in that sense. Now, here's where it gets tricky. For this sector, the vast majority is built to suit sales. So then the company and the owner become the owners. And then the operators and the industrial parks maintain some of the inventory for rental purposes, like multi-tenant rentals, or someone who doesn't want to be an owner-operator actually will rent from the landlord or the developer. But I would say it's the minimal portion. The vast majority makes sense because when they invest in real estate, and this comes back to the free trade zone, they can leverage all of that investment into the investment they're doing in fixed assets into the country. So yes, owner-led, but then it's sold to the occupiers, to put it somehow. And that's the vast majority for advanced manufacturing, life sciences, semiconductors. That's how it's being done. We have some exceptions, obviously, that they will rent. And then the third layer is what happens when the owners want to rent, but they had either purchased or something happened. So we have a huge REIT market, local. We have like about 4 REITs here, but the most prominent ones are Improsa Safi, BCR Safi, and Prival, and some others like Multifondos and so on and so forth. But the REITs here actually control a large portion of both office, industrial, and retail. To give you an example, Improsa, which I think is one of the largest one, holds more than $750 million in managed assets. And they go out and they purchase this real estate that was either on rent by the developer, and as part of their exit strategy to keep on developing, they'll sell it to the REIT. Or some of the owner occupiers saying, hey, I made an analysis. It doesn't make sense for me to continue to own this asset. I want to rent it. And they will sell their operations to the REIT, which is very interesting because it makes our work super interesting. And sometimes we're renewing or making an expansion. And this is with a developer. This is owned. And this you need to go and negotiate it with a REIT. And it's the same company and they're 3 buildings side by side with each other. So that happens. So the vast majority, as I said, owner-led. Specifically for free trade zone, you're going to have 3 or 4 players and they have control of these huge parks. Because the other portion of why that's important is that you don't see a lot of standalone development because you need infrastructure ecosystems to go with it, specifically for life sciences, right? So you need to have the right caliber of water, and you need to have a suppression system with redundancy that is park-led and those kind of things. So it drives the demand into that. Now, it doesn't mean that there aren't standalone or smaller developments. There are. They're just not as common.
So if I looked at it and said, I like Costa Rica's story, I like the fact that eventually they might run out of land, I want to invest there, could I find an opportunity of a multi-tenant industrial building to buy?
You could. You would be competing with the REITs though. So then it would come into a question of, how am I assessing risk of coming into a country, let's say outside of the US, outside of Canada, and understand what are the IRRs or the caps that product's going to bring into my portfolio and see if those match up, right? Because since there's so much demand and there's this very well-established REIT, let's say sector, we're seeing closings for industrial, which is considered very low risk here, caps between 8 and 9.5%. And then if you bring that opportunity to someone in the US and they'll be like, for the risk factor going to Central America, I don't have more operations there than this. Doesn't make sense to buy at those returns. That would be the question mark. So the short answer is yes. Are those opportunities there? Absolutely. Can you go and compete and buy, I don't know, the operations for, I'll just put a random example. They're not selling, but like for Hologic or for Abbott. Technically you could. The question is, what is your risk return ratio? What are your expectations? And know that you will be competing with the REITs that locally have been buying historically here.
So what are cap rates for an industrial building? Typically, what are you seeing right now?
Anywhere from 8 to 9.5. That is usually the closing cap rates that we're seeing, at least from the public records of REITs or what we're seeing from some institutional investors locally.
Interesting. Yeah, I mean, that's also attractive because if you're in the US or Canada right now, you're probably in that 6.5 to 7.5 range. you might be lower for like institutional grade stuff. You might see cap rates even getting into the 5s, but it'd be very rare to see something in the 8 to 9.5 range, unless you're in a really small market. And maybe that's just what gets priced in, is that risk factor of being in Costa Rica versus in like a market like Dallas, where there's more exit liquidity, where I don't know what that'd be like in Costa Rica. I guess that's just maybe your ultimate end game is to sell to one of those REITs anyways.
Yeah, I mean, not necessarily, because it depends on the strategy. If you're a owner, I want the long-term view on the assets, which there are developers who do that. Or if you're a developer with an exit strategy, trying to sell it and then leave, go and redevelop something. So we have a little bit of both in here. So I'll put an example. We have a large developer here called Portafolio Inmobiliario. And Portafolio is more of a hold strategy. Whereas we have someone like Garnier, which is another huge, very well-renowned developer, that they will probably own, stabilize, and then will sell it as an investment product to, as I said, a REIT or an institutional investor. And then industrial right now, there's so much demand, and the perception of it is so high yield, low risk, that people are trying to cling to it or look at it at an interesting rate within our constraints. But if you turn that into office space, for example, you're going to start seeing caps anywhere between 12 and 15 and lower demand. There's just lower appetite right now for office. And then again, what's weird is when you zoom into that Excel, you have people saying, I'll give you an offer for a 5% cap if you sell me this asset because it holds this amazing multinational company on a 15-year lease, and nobody wants to sell that here. Those are the developers who develop and own and keep on owning. To give an example, there's a large developer of office called America Free Zone. They do not sell anything. They have been clinging to their real estate since I have a memory, literally. Like my dad used to work at a company called the Seafood Stock Exchange, something weird like that. I can't remember the name, but it was like the seafood exchange of whatever. And in that park, or right next to it, actually not in the park, right next to it, they were in a warehouse. And I fast forward into that, and I'll drive by and I'll be like, that's the warehouse my dad used to work. And it literally like held stuff for seafood, and now it's an office space reconverted, or it's something for advanced manufacturing right next door. So I can actually see that. And those are the same owners like from forever. But yeah.
It's interesting. Yeah, it's so fascinating getting to look under the hood of another market, because these are things that I would never have thought to consider with Costa Rica. But I feel like you've given me a world-class education in the market. Anything we missed, anything we haven't talked about that you think is worth emphasizing or elaborating on?
Yeah, so I would say a little bit what I kind of grasped into it, and it was the incentives, the free trade zone. That is probably one of the biggest drivers. So super quick summary so that we don't stay there. I would say that this is important because when you get into the country, the bar is as low as $150,000 in fixed asset. That is your minimal investment. And with that, you can get up to 8 years of zero duties, like no VAT, no income tax, no repatriation of capitals. There's a tons of incentive of that within the city. If you go outside of the greater metropolitan area, because the government is trying to incentivize that development in, let's say, in the outskirts of the city, and this works particularly well for life sciences and industrial, that incentive goes up to 12 years. And the interesting part about it is there is small print in that law, in the free trade zone law, which is a regulated one, by the way. It's not something that, someone said and it's just been going there. There is an actual free trade zone law. So independently of parties and what's happening politically, there is a law established for that. So it gives it a ton of stability. And there's this little clause called Article 20 BIS. And that says that if you do a significant reinvestment in the country, then you can actually renew your terms. So I know companies who have been for 35 years who have not paid a single cent in taxes. But what's interesting about it is that the input, and let's say how do I say this in English? I want to say encadenamientos, which means the trickle down or sort of the effect of the other things happening is that for every dollar exempt in free trade zone taxes, like 2.5 get invested into the economy. Salaries, jobs, vendors that need to create services or products for these companies, then the spend of all of those salaries into the broader market. So it's an economy motor that some sectors of our society say like, hey, we're exempting this huge multinational, we're not getting that money. That's too short-sighted. Like, you're not seeing behind the title of what's all of the value that's coming in back into the economy while doing this. And that's, I would say, one of the most important factors, because it brings a lot of value into the companies by not having that expense from a tax perspective. And it outputs so much more value into our local economy. Like, that's why we make those jokes, like your rite of passage. Oh, if you haven't worked at a multinational company in the free trade zone, are you even Costa Rican? Like, really? It's just part of what we are in. And it sort of holds our economy locally, which unfortunately is not as dynamic. Like, corporate service sectors grows double digits since I have a memory. Like, last year it grew 17.4%. Corporate services, free trade zones. And a very similar double digit for industrial and life sciences manufacturing. Our local economy is going to be in 2-3%. So it's sort of also, we're piggyback on their back of leading everything else. So it's what helped us drive the entire economy. So if we take that down, we're taking steps back years probably if something like that happens. But I would say that's very important. And the other one, which I think, Chad, just as a final punchline into that, is the Costa Rica is not the cheapest. That's not a secret to anyone. You can also go to Placer.ai, Google it. Is Costa Rica the cheapest country to outsource? It is not. But what's interesting about it is that it is a higher output country for it. So if you compare, let's say, and I'll put an example with the US, just because that's where a lot of our clients come from. So we have this very handy top of mind. But any company coming from the US into Costa Rica, they can expect anywhere between 30 to 40% of cost reductions just on labor, right? And then obviously there are other cost efficiencies on real estate and many other things. But only that, 30 to 40%, that's a significant impact on a company's P&L. It's interesting when we start to see that sometimes higher cost can mean better ROI. And I think that is the main reason why Costa Rica is still on the map, both for corporate services and especially now for manufacturing of medtech, life sciences, and advanced manufacturing.
It is so cool to see your passion, enthusiasm, and knowledge for Costa Rica. The government should be paying you money to be a spokesperson for it, because it is awesome.
I agree.
If anyone from the Costa Rican government is listening, you need to get Alvaro on your payroll and start giving us some marketing dollars. You are awesome, my friend. That was so well said.
I appreciate that.
So what you brought up my book. One of the things I mentioned there is that any market you go into is you got to make sure you align yourself with professionals, because as you mentioned, there's so many things that if you're not aware of, you can get burned. So I would highly recommend anybody in Costa Rica or interested in Costa Rica's market to reach out to you. I'll put your contact information and LinkedIn into the show notes. Any other way that best for people to get in touch with you if they want to reach out?
Oh, LinkedIn for sure. I'm super active there. So if you write a comment or send me a DM, I'll be there for sure. But if not, you can share here and write down my number. Reach out. Feel free to give me a call, send me a text or email. I would say that's the order. If you want a fast response, it's like LinkedIn DM, text or call, and then the email. That is my speed curve right there.
And I'd recommend people reach out and connect with you on LinkedIn, even if you don't have interest in Costa Rica, because you just put out some amazing stuff on LinkedIn. I look at everything that you put out and enjoy it. So even if you don't have a need for Costa Rica right now, I'd recommend connecting with Alvaro anyways. Alvaro, I want you to end with the sign off because I got to hear your name one more time in your voice. You can sign off however you want, but you got to put your name in there one more time.
All right. Well, Chad, thanks for the invitation. My name is Alvaro Cortes, and I'll be more than happy to help you with anything regarding office and industrial in Costa Rica. And actually, they need this meeting room, so I need to head out. So thanks so much, Chad.